Okay, well, hello everyone. Welcome. I'm Yvonne Schwab, ACG Silicon Valley CEO. I am very excited to present you today's event, Gender and Racial Bias in Venture Capital, in collaboration with Santa Clara University. For those of you new to ACG Silicon Valley, we are the leading business-to-business networking organization in Silicon Valley, providing connections, thought leadership, and enabling personal and organizational growth. We are part of a worldwide organization, ACG, offering an array of networking opportunities with 13,000 members in 59 chapters across the world. Now, ACG Silicon Valley is offering a variety of virtual events in the coming months. We invite you to visit our new and improved website, acgsv.org, to see the full calendar. We are excited to have our first event for the CTO Innovation Circle tomorrow with the topic of responsible use of AI. Please join us if you can. And we're also thrilled to bring you a 4-part series, joint series with ACG chapters Austin, San Antonio, and San Francisco on tech trends from Silicon Valley to Silicon Hill. Part 1 will take place on March 11th on the topic of what's trending in tech today. We also just booked our next ACGSV wine tasting. This time we will be enjoying wine from Grey Wolf Cellars in Paso Robles. Please register for this event ASAP, as tasting kits have to be sent out soon. Of course, today's event would not have been possible without our sponsor, Santa Clara University. Please welcome Mary Cody and Elaine Scott, who have joined us today. Thank you so much for your support. We appreciate it. I would now like to introduce you to one of our speakers, Dr. Maya Ackerman. She is a leading expert on artificial intelligence and computational creativity, was named 2020 Woman of Influence by the Silicon Valley Business Journal. She is the CEO, co-founder of Wave AI, a leading musical AI startup. Dr. Ackerman is also a professor of AI at Santa Clara University, as well as an opera singer and a music producer. Dr. Ackerman earned her PhD in computer science from the University of Waterloo and held postdoctoral fellowships at Caltech and UC San Diego. Since 2007, Dr. Ackerman has published 40 peer-reviewed research publications, has been on the program and reviewing committee of 20 different AI journals and conferences. Now, without further ado, I give you Maya.
Thank you so much for the introduction. It's a pleasure to be here. I'm going to begin with a short presentation to share with you some of my recent research findings. Is everyone able to see my screen? Okay, wonderful. So this is research done with my students. I have a wonderful group of students, Chris, Yuhong, and Basu. All right, let's get started. So imagine we have here 4 startups. One with a female CEO as a co-founder and 2 male co-founders, one with a male co-founder and at least 1 female co-founder and a male CEO, an all-male co-founding team or an all-female co-founding team. All right, so basically mixed gender female-led, mixed gender male-led, all male or all female. When startups go to pitch, there is typically not much more than a founding team in the beginning. And the CEO is usually the one who pitches, the one who actually does the presentation for investors. So my question for you is, who do you think most investors would choose, assuming that all else is equal? Sort of a very much a simplified question here. So I don't expect you to actually answer it out loud, but just for yourself, I invite you to answer in your own mind, all things being equal, assuming that the companies are identical in all other respects, who do you think investors would be most likely to invest in? All male, all female, mixed gender female-led, or mixed gender male-led? And if you want to go further, then consider who do you think would be in second place, third place, and who would investors be least likely to invest in? So just take a moment to answer this for yourself. And we are actually going to be answering this question very concretely in a few minutes. right? So either answer who you think will be most likely to get investment or create a full ranking for yourself. Okay, so before we go into answering this question, I want to provide very brief background, and it's going to be important for getting the most out of the discussion today. So funding to women is on the decline, okay? In 2019, female founders raised 2.6% of venture capital funds, and mixed gender teams, including both male and female led, raised 14.1. What's critical is that in 2020, both numbers dropped. Only 2.1% went to female founders and 12% to mixed groups. Okay, so this is very, very important. It's a problem that's getting worse. Another important aspect to understand is that mixed gender teams perform better. It's tempting to think that if women are getting less investments, then perhaps there is something that they should be doing better. And a very critical part of the picture here is that there's a lot of research consistently showing that mixed gender team, and actually mixed race teams as well, although that's not the focus of this 10-minute presentation, perform significantly better. So gender balanced teams perform better than male dominated teams in terms of sale and profit. Gender diverse executive teams are 21% more likely to yield higher financial returns. One of the most amazing statistics is by First Round, who showed that their portfolios that have at least one woman perform 63% better in terms of value for investors. That's a massive statistic. And when it comes to CEOs, there is no performance difference, although there is some recent research showing that there might be some advantage to female CEOs, assuming that they raise the same amount. But I think this is sort of a good statistic to rely on, the no difference one as far as long-term. All right, so now I'm going to show you some of our findings. So what we did is we looked at 48,000 companies on Crunchbase, and we divided them into 4 groups. One group are companies that only include female co-founders, so we call that female only. The next group, and that's a great majority of companies, are companies that only include male co-founders, okay? Then we have mixed gender, so some guys, some girls, some men, some women, but the CEO is male. And then the same thing, mixed gender, some female co-founders, some male co-founders, but the CEO is female. Okay, so kind of very cleanly broke it down into 4 groups here. The great majority of companies only include male co-founders in our data set and in general. So just looking at this picture, you could say, well, it doesn't look like women are so interested in getting engaged with startups. And that's, you know, from a research perspective, that could be a possibility. And so in all of our analysis, we didn't want answers that could be explained away by women are not interested in doing this. So the problem is that most of the time when you see charts about how much money is raised, they show you totals. If most startups only include men, then of course most money is going to go to men. So here we see the totals for these different types of groups in North America, Europe, and Asia Pacific, and most money in these 3 continents go to male-only teams. Again, not surprising because of just the number of such teams. So what we did instead of looking at totals is we look at averages. Okay, this is a really critical point here. So we look at averages. We look at only companies that have managed to raise something, and we ask, okay, if a company that only includes women raises money, how much would they raise on average in North America or in Asia Pacific? If a company that has both men and women on it, as far as a co-founding team, but is led by a man, how much would they raise in North America? So it's averages. When you look at averages, you can't say women are not interested, that's why they're not getting money, because we're not looking at totals, we're looking at on average how much different gender compositions manage to raise. So let's look at this result now. Average amounts raised in North America, Europe, and Asia Pacific. So you see, actually across these 3 geographic regions, everywhere we looked, as far as the group that gets the most amount of money, it's mixed gender, male-led. So it's not male only, which is perhaps what many people would have guessed. So on average, mixed gender, male-led consistently raises the most in these 3 continents. In second place, we have male only. In third place, we have mixed gender female-led, and consistently in last place, we have female only. It was very surprising how consistent this pattern is. Then we zoom into North America, and we see, for example, that LA follows the international pattern, mixed gender male-led, followed by male only, then mixed gender female-led, and then female only. What's interesting about Silicon Valley and New York is that they flipped the international pattern. So male only actually raised more than the mixed gender male-led. So including a woman on a team, even not as CEO, is a little bit of a disadvantage. All right, we did the same analysis. I'm going to start wrapping up here. Did the same analysis across industries, and it turned out to be true in all but 2 industries in our data set. And so in short, investors would choose mixed gender male-led team in first place, and in second place, all male, unless we're looking at Silicon Valley or New York, where it's flipped. And then often after a big gap, we're looking at female-led companies, and finally female-only companies. All right, doesn't mean that it happens every single time, but these patterns are very, very strong. This is what happens most of the time. All right. So we also looked at and did a machine learning analysis looking at the importance of gender against education, prior exit, and team size. So we built a machine learning model to predict if a startup will reach a priced round. And shockingly, we found that the gender of the CEO turned out to be more important than education and the number of prior exits. This is not something that I was expecting. I was more looking at how big the gap was going to be, assuming it was going to be less important than either. So this is not an issue of all things being equal. Gender is more important than objective criteria that investors openly are interested in. That was really a big surprise. Okay, I'm gonna actually skip the recommendations here because we're going to have plenty of time to talk about what to do about it. I just wanted to briefly mention that this is part of a 4-year initiative where we're looking at studying both racial and gender bias and working with investors and with the Miller Center to look for actionable solutions. Thank you very much. I'm going to pass on the proverbial microphone to my colleague, Ahmed Omar, to begin the panel.
Thank you, Maya. So my name is Ahmed Omar. I'm with the Computer Science and Engineering Department here at Santa Clara University, which means I am lucky enough to get to work with Maya and the wonderful Dean Scott and with Mary. However, my role here today, I'm afraid, comes from a place of ignorance. So as a moderator, I'm therefore balancing out the expertise of the wonderful panel that I have the pleasure to introduce right now. So if I may, just in the interest of time, I'd like to ask Priya, then Anne, then Cheryl to briefly introduce themselves.
Hi, everyone. My name is Priya Cyprasad, and I'm a partner at Mayfield. We are a 52-year-old venture capital firm that's based in the Valley. And over time, we've invested a lot in enterprise, consumer, as well as some biotech. And I, in particular, focus a lot on our Series A and Series B investments across enterprise software. And super excited to be here today among these amazing panelists and talk about an issue that's really near and dear to my heart.
Great. Sure. My name is Anne Skeet. I work at the Markle Center for Applied Ethics, and the areas I spend time with are leadership and business ethics. So looking at the ethical challenges faced by leaders and their followers. And then also in the business realm, where we spend a lot of time thinking about responsible use of technology and other issues that are challenging people in the business sector.
Hey everyone, I'm Cheryl Campos. I'm the head of venture growth and partnerships at Republic. We are a spin out of AngelList that allows anyone to invest in startups, and for startups to raise up to $1 million. And starting next month, it will be $5 million. And so we're democratizing access to an asset class that was previously more for just accredited investors. And so that's been really important in terms of supporting diverse founders. 40% of our founders are women, 20% are Black and Latinx, and they hail from over 33 states. And so that's just by sheer nature of using our platform. And so not only that, but I'm also a scout for Lightspeed Venture Partners, and I'm also an investment partner of the Community Fund, where we back startups that have a community-centric focus. And besides that, I also created a group called VC Familia that helps with bringing together VCs who identify as Latinx to make sure that we're co-investing in deals and diversifying the cap table.
Thank you all. I'd like us to start with a prompt of a question that Maya has already answered, particularly in the gender domain. The question of what is the problem? So Maya, you pointed out to us how gender was surprisingly a leading factor. Perhaps are there other factors that one would hope would be irrelevant that are so dominant that you'd care to talk about? This is open to anybody on the panel.
Yes, I mean, I'll get started a little bit here just to get the ball rolling. We did look a little bit, we started looking with my research team at racial bias as well. And we are seeing that to be sort of another key factor in the data. Unfortunately, again, a lot more than we were hoping. Again, similar characteristics such as education and prior business success. So I'd love to hear, the investors' experience on that as well.
Yeah, so just to kind of go back into what I previously mentioned, VCs right now have the power to give the benefit of the doubt, which is very interesting because sometimes I personally, in my direct investing roles, I'm like, who am I to give the benefit of the doubt? Because especially VC is also very subjective, right? It is something where you kind of just you're trying to manage all of these things, right? From sourcing to working with other VCs to your inbox, which by the way, I was up until 4 a.m. trying to deal with all of that. And so it's just a matter of it's so subjective as to like how you get on that call with the founder and like what mood you're in, what time of day it is, like what you're most focused on at that time, whether or not you're caught up on the trends of like NFTs or other things that are going on in the crypto world. It's based off such a confluence of factors that it's imperfect. And so to that end, I'm not really surprised sometimes by the facts that I see about this, because at the end of the day, people will go towards what they're most familiar with. And so it's by investing in founders, like for example, the community fund, we have about over 50% of our investments so far in the past 5 months have been to underrepresented founders, right? And that's just because we also made sure that we made the investor side of the table diverse. And not just because we're diverse, that means that it's going to get funded, but you still have to be very intentional about it. You have to remember and think, okay, I have to make sure that I'm giving my full attention to this founder, that I'm seeing this email at a time where I can actually evaluate it versus, just kind of throw it to the side, and just be mindful of all those biases that you can easily get caught into, but you just have to consistently remind yourself that, you have to take a step back and make sure to give it the time of day.
Yeah. So I can talk a little bit about a personal experience of mine into this, but to answer your question, Ahmed, earlier, I think diversity comes in so many different shapes and sizes. There's of course the woman dynamic, but there's also, different races. There's people from different backgrounds, different socioeconomic upbringings, people who've had more operator experiences versus more kind of traditional finance experiences. So it comes from sort of very, very different backgrounds. But my sort of personal experience was before I was at M12, I was actually one of the founding members of M12, which is Microsoft's venture fund. And when I was over there during my first year, we were doing a portfolio review with the rest of the investment team. And as we were going through our portfolios, it was pretty jarring to me and 2 other women on the team that we had only 1 woman founder, and we had at that point a portfolio of 30 investments. And so we were incredibly active during our first year, but why do we only have 1 out of 30 that's a woman CEO founder, right? And so I sort of actually posed the question to our team, and the answer that the easy answer that's easy to give in this case was there aren't that many women founders that are building enterprise-focused companies. There's so many more women founders that are building consumer-focused companies, and we're only enterprise-focused. And so myself and 2 other women didn't really take that answer at face value. We decided to put a little bit more time and effort into investigating whether that's actually true, because I hear that statement from not just our VC firm, but from so many other VC firms out there. And so we decided to actually start a female founders competition. So we did a call to action to all women founders out there who are building companies in the enterprise. So not consumer focused women founders, just to see maybe we get only 5 applications, right? Then in that case, maybe it is kind of true. And we leveraged Microsoft's broader platform to launch that competition. And I will kid you not, we got 1,000 applications. And so I didn't know there were 1,000 women founders that are building companies, building startups, period. But these are women founders that are building startups for the enterprise, right? So it was shocking that, where were these founders before? Where were they in our pipeline? How did we not have access to them? And I think that was a jarring realization for me that, the supply of women founders and potentially other forms of diverse founders are out there. It's just that venture capital firms traditionally don't have access to them. And so what's actually breaking that access, right? And so that's where a lot of my thought process goes into. So that, to answer your question, that is, I think, the problem.
Thank you, Priya. Right. So what do you say to sometimes a comment that not enough people are applying? Is one version of that, but another one is when you have a statistic that's an improvement. So the increased effectiveness of women founders. What do you say to somebody who attributes that to the higher bar that's put in front of women founders, and therefore is dismissive of that statistic because of the higher bar? Maya, do you perhaps have a thought on this?
So fewer women get in because there's a. Could you clarify this one more time, please?
Oh, so you cited statistics about 63% more effectiveness with a female-led startup.
More return on creating value for investors.
Yes. So what do you say to somebody who attributes these statistics to the higher bar, to the actual bias?
I think that could be part of it, because there is a much higher bar for women to get to the same place, because there is strong bias against them. It just doesn't justify anything. Ultimately, I don't want to see a difference. I want to see men and women be equal, have the same opportunities and the same results. And that's what would be the case if gender wasn't so important.
So it would be nice to actually see an unbiased result.
Yes, exactly. One day.
So moving on to another question, and this can be taken in one of two ways, but the why of the problem, right? So the first way I'd like us to perhaps address this is, why should we care? If enough good companies are funded, why is this a problem? I'm sorry to phrase it in such a horrible devil's advocate sort of a way.
Well, I think it's a fundamental issue of justice. I mean, just to sort of talk about fairness. And so we want people to have equal access to equal resources. We know that kind of bad habits form early in organizations. So these are the youngest companies, right? These are startups. And so you want to see kind of the best coming forward in terms of diversity, equity, and inclusion practices that they can leverage later on as they grow into more mature companies. So it's troubling to see that kind of bias sort of blunting potential right out of the gate. And we know the nation's talent is pretty evenly distributed, but that opportunity isn't. There was this great story in the New York Times last week about the National Education Equity Lab. And they're actually working with high school students and trying to solve the challenge of the pipeline to higher ed and diversifying it. And they took students from impoverished backgrounds, 92% of whom were of color, and they put them through college courses. In the first cohort, they went to Harvard classes, and 89% of them did well enough to get the college credit. So you can see that given the opportunity, they really can meet the challenge and excel. And so I just asked myself, what is it that venture capitalists none of us, we can't know what we don't know. So what is it that we're missing in terms of the talent and the upside that could be brought to the table?
Yeah, I think VCs in particular have a fiduciary duty to really invest in the best startups. And it's not, Ahmed, your question was like, is it good enough? Like, it's not good enough. It's just wrong, quite frankly, to invest in, okay, if we've invested in enough startups, it's good enough. No, it's not. You have to, the whole point of venture capital is to invest in the unicorns, the best of the best, the cream of the cream, because that's actually how the economics work. So let's talk numbers, like, especially if, female-led startups are the ones overperforming, then those are the ones that you should be backing. So if you already see the data and the numbers don't lie, then why would you still keep doing what you're doing? Because clearly it's not working. So to that end, that's what I would say. It's just like, it's a service to the society, right? That we're not giving it to the people who are underrepresented, the ones that are hustling, have the grit, the energy. I have seen so many underrepresented founders doing so much with so little, doing the most with the least, that just imagine if they had more access to capital, it'd make the world a difference. That's why Republic is usually technology in itself to democratize access. So not the VCs won't have all the power, but to have anyone around the world who can take their experiences, understand the founder, and decide whether or not they want to invest in that. And so through that, we see the democratization leads to more underrepresented founders getting funded and getting the capital that they need to thrive. So yeah, it's not good enough.
Thank you, Cheryl.
I'd love to add to that. I really enjoyed the answers that both Anne and Cheryl shared here. Very interesting. What I wanted to add is that I think society is underserved by the fact that a lot of founders come from very similar backgrounds. I see that particular in musical AI, which is where my startup is, and all the other founders in the companies that are fairly noticeable in the space were all men, and mostly white men. And I don't know if it's an accident or not, but somehow the way that musical AI is attempted to be brought to market is very uniform. It's sort of this, mostly what I've seen is have a system that creates music so that instead of hiring people, people could use the system to create the music directly. And that's not the only way that musical AI can be brought to market. Frankly, I don't think that's the best way for it to be brought to market. And so I think that in other fields as well, if you bring in somebody from a genuinely different background, they might have a fundamentally different approach to what should be done, what's better for society, what's also more profitable ultimately. And so there's a massive loss, not only in returns, but to society, to the people getting served by having such limited perspectives.
I have to say, I'm taken aback by the distinct three directions you've all gone through here, and in particular your emphasis on how the company is like a young entity and being taught a bad habit. So the moral dimension there. Cheryl, you correcting my fallacious assumption that this is some sort of a field where, oh yeah, I've gathered enough crop, it's good enough. Whereas there's a responsibility to do the best. People are wasting talent and resources this way. And Maya, the point that this is a practical matter of flawed methodology as well is frankly incredibly eye-opening. And I wish we could stay on this point a little longer, but there's another form of why. Why is this happening? Do you have any thoughts on this?
And I have some strong thoughts here. So I want to start off by saying I fundamentally, for my own mental sanity, don't think that this is coming from a place of complete hatred and bigotry and all those things, right? I think it's coming from if we take a step back and think of the venture capital industry, for years and years and for decades, it's been about the LPs who give the venture capitalists money to invest. They've always expected great returns, right? We're in the business of making money for our limited partners who gave us the money, and we take a percentage of the cut, right? And that's sort of the business that we're in. And historically, when venture capital first started, pretty much everyone at the VC firms were older white men, right? And so with that in mind, the types of folks in terms of entrepreneurs that they invested in felt a little bit like felt looked just similar to them. They went out to their own networks, they networked with people, they invested in these founders, and then generated great returns for their limited partners, right? So they made decent amounts of money, great returns off of investing in a certain type of entrepreneur that came from certain type of background that delivered certain types of returns. And so over time, the reason why people are venture capitalists can sometimes be scared to see alpha in something that looks and feels different from this pattern recognition that they've had over time is that what if we were to make an investment in something that's new and different and it doesn't turn out like our previous successes have, and we have a certain amount of responsibility to our limited partners to generate great returning funds, right? And so I actually think the paradigm should be on LPs holding VC firms accountable, not just for financial returns. Financial returns, of course, is why they're in the business, but also financial returns with funding diverse teams, right? And both should be emphasized equally. And I think when that happens, VC firms are going to have a different incentive, and partners at VC firms are going to have a different incentive to go out there and find the alpha in founders that deliberately don't look like the patterns that they funded in the past and create new patterns. And one example that I have of this in terms of new patterns versus old patterns, if you look at venture maybe 30 to 50 years ago, the type of entrepreneurs that were funded were people who are incredibly successful. They built a repertoire of businesses in their past. They're likely repeat founders. And that was sort of the profile. They tend to be a little bit more from an older demographic profile. And then with the wave of the Facebooks of the world and that entire era that came on board, where you've got college founders, younger founding teams, and it initially took a couple of VCs being able to see that as a potential opportunity and investing in them. And then we all know the types of returns that that's generated for VC firms of that generation. And so now when I'm, as a venture capitalist, when I'm investing, no one really cares to ask the concept of age. Has this entrepreneur been there, done that? You could be a 21-year-old college dropout, or you could be a 55-year-old seasoned entrepreneur, and both have equal access to capital now. And so with that sort of example, I want that, and I'm hopeful that that happens for women in the next decade, and that happens for folks from different sort of demographics.
Yeah.
I'm hopeful too, and I certainly with Bumble going public, we have, we start to have some of those examples of women and who are bringing companies public and having great success. And I also feel like the venture industry could be both diversifying itself, continuing to diversify itself more. Not quite half of the venture firms' employees are women, but only a very small percentage, 14% of them, end up being the investment principals. And the numbers are even worse when you look at people of color. It's 75% of venture capital firms are comprised of white people. So it's not there in the firms either. And so that's part of the problem. But I think the venture industry can start leaning more on data, which it professes to love. And there's plenty out there. We work with an organization at the Markkula Center that we really appreciate the work. They're sort of the cream of the crop in terms of academic research in this area around diversity and inclusion, called SODI, which is the Science on Diversity and Inclusion Initiative. And there's study after study that would help, I think, investors and LPs, to investment capital professionals and LPs, to feel more comfortable that there's money in them, their hills, that there is absolutely, one study from a scholar out of Rutgers, Patrick McKay, looking at a retail enterprise, found that for units, per store unit, $44 million increase in revenue if the climate was supportive of people from a diversity of backgrounds. He was focused on ethnic and racial diversity, but I think there's studies that really can help the venture investor to kind of get over some of those concerns for just about every lens you would want to put on it.
Yeah. we've had the stats for years, and funding for women has still gone down, and the numbers for POC haven't been shifting. So low-key, I'm actually like, is this really changing, right? Like, is there an impetus for them to change, right? There's something called the diversity rider that I want to point out because it actually just came out today, just some of the effects of it, right? The diversity rider is actually legal, like is actually a legal insert, the rider that you put into a term sheet to say that the VC will actually make an effort to bring in more diverse co-investors into the round. So it's legal, which means that if there are VCs that adopt this, which, you know, first round was the first one to say yes, then everyone came after that because that's how VC works. They're contrarians, but decide to go to the group thing, you know, that's how it works. And so since then, there's this whole rider that has allowed, for example, Phoenix, I don't know if you know, it's led by a Latinx founder, it raised a Series B, and they actually allocated 10% of their round to just Black and Latinx investors. So that's how you build generational wealth, is by taking that slice of pie, being intentional about it once again, and like then actually allocating it to Black and Latinx investors that wanted to invest and support a Latinx founder. That's huge. I don't think I've ever seen a Series B company do that, ever. And this is 2021. And so to that end, it's something where it's refreshing, it's meaningful change. VCs have stood up and said, yes, we'll do this. And, you know, it's legal. So it's something where it's over time we'll get to see the effects of it, but this is just one of the many examples. Like VCs have been winning deals by adopting this rider because it shows that they're committed, they're talking the talk and walking the walk. And to be honest, people are tired of the smoke and mirrors of VCs of like, yeah, we're doing this, we're like taking these meetings, okay, but where are the checks? Okay, I mean, where are the other things that, like, you know, show that this is actually moving the needle? Because right now it's not. And all that uproar that we had with Black Lives Matter, that, like, you know, all these people were like, oh, we want to support all that. Like, a year from now, I want to ask these same people, what have they done a year from now? Have your stats changed? Everything? Because data talks, the numbers talk. So once again, that's kind of the question of like, why isn't that happening? Well, because they don't really have an impetus to. They don't have an impetus to change how it's been working so far. So to that end, there's going to be these initiatives, and especially with VC Familia, as I mentioned, we're coming together, sharing more deals, making sure that we can get things done so that together we can, there's a phrase, la unión hace la fuerza in Spanish, which means, you know, together we can. And so that's kind of the ethos of all of that is, you know, especially with Republic, drops in the bucket. So, you know, I think together we can.
Thank you, Cheryl. So you're actually taking us to what will be my last question before we switch over to audience Q&A. But before I do, I should explain, I'm trying to recap a couple of points to make sure I understood correctly. So Priya, there's a lack of risk, willingness to take risk because of a tried and true formula has its own momentum. But at the same time, Cheryl, you're pointing out that the data that Anne is pointing to regarding the opportunities, if one explores an unexplored area, has already been out there. So there's also a lack of action. By
the way, the data is important. So Maya, you're doing a good job. All I'm saying is that the action part needs to change.
Yes, but there's also a framing question here as well, isn't there? Because I really appreciate, Priya, how you started by indicating that the question of bias isn't a question about questioning people's intentions, which when it's brought up, there's often this defensive attitude and not taking it as an opportunity to make oneself stronger, better, which is awfully lost. So I'm very appreciative of all these points, but this takes us to the question of how do we fix it? Any thoughts on that before we then switch over to audience Q&A?
I can start this one.
And also, if I've misunderstood anything, please correct me. I'm just trying to recap what I'm hearing. Thank you, Maya, please.
So I think I'm going to sort of recap a little bit of what was already said. But, you know, as a researcher, it's all a hypothesis for me until we really test it. And from a research perspective, a lot of this has not been thoroughly enough tested, I guess. So one of the biggest problems, with women and certain racial minorities, as far as getting access to capital, is a lack of role models, both role models in the media and role models, not quite enough examples, even though women in particular are overrepresented in unicorns, which is super interesting. There's an disproportional number of female CEOs that are leading unicorn companies compared to how many women get funded, for example. And so there's not enough role models. And so what happens is, and this I say both as a researcher and a founder myself, is an investor maybe gets an email, and we know that there's no problems with emails. So they get an email from a woman or from a racial minority, and they're like, great, let's help out. Then they meet with that founder, and they just have trouble imagining them leading a unicorn company. So maybe they can imagine them running a successful business to some degree, but that's not what they're looking for. They're not looking for a successful business. They're looking for somebody who's going to shake up an entire industry. And when investors look at most women and certain minorities, they have trouble making that connection in their head. They have trouble imagining that person changing the world in a very concrete, real way. And that's where it sort of ends for a lot of people who try to raise money. Just this inability to make this, to imagine things being this way. And so as a result, we need some form, in my opinion, of affirmative action, which is sort of related to what Cheryl is saying. It doesn't have to be government mandated affirmative action, but some sort of action that gives extra motivation. And that motivation is not there necessarily for fairness. It's just to break the old patterns, to give some kind of reason so that when they hear this little voice, it's a great idea, but I just don't feel it. So they have motivation to overcome that little misguided gut feeling that is nothing but implicit bias. So that's why I really like the suggestions that Cheryl was giving, like those guidelines that force people to consider something else. And finally, where you see this having been successful is STEM. So I'm a STEM professor and an entrepreneur. And in STEM, people see me, they don't think computer engineering professor. I know that, it's not a secret, but that did not prevent me from getting a PhD, from getting postdocs, from getting plenty of academic offers. Because there is extra incentive that incentivizes universities and faculty to try to overcome implicit bias, okay? We need that kind of incentive in venture, because until that happens, this little voice telling them, I just don't quite see it, I can't quite imagine it, is gonna keep winning.
Right. Maya, that's such a good point. I wanna add on one more perspective that sort of completes it, where the reason why I think that a lot of venture capitalists aren't able to envision is because this lack of role models, right? But it's a point that Anne had mentioned earlier, where the VC side is not diverse at VC firms, right? The investors themselves are predominantly white men, and especially as you're looking at capital allocators like general partners at VC firms who control these decisions, that tends to be, I believe the stat is still 9. There's only less than 10% of general partners at VC firms are women. And so with that in mind, it becomes increasingly more challenging to be able to see the alpha, because when it's a bunch of male partners who are just sticking with what they've done before, it's harder to sort of envision that. So my fix is in order to enhance more funding and make funding be significantly more equitable, we have to also fix the other side of the equation of what venture capital firms look like.
Yeah.
And I would just add, Ahmed, kind of wrapping up and putting a bow on what's been said. We need efforts in at least 3 domains. Our research sort of suggests that we can really leverage the way human beings think and work anyway. So first, we can draw attention to the issue, as a discussion like this does and data does. Then we can help with how people construe or make the decisions that they make. Having a more diverse venture industry itself will affect that construal process. And then the last piece is the motivation, is the desire for organizations to make a difference. And there, I think the culture, which is something that gets maybe glossed over and seen as kind of a soft skill, but actually culture management can be a very hard technical skill. More attention can be paid there.
Thank you. Cheryl,
Yeah, so actually, that was a beautiful recap. She put the bow on it. I can't untie it at this point. We're good.
Well, in that case, then I'll move us on to audience Q&A if the panel is amenable to that. There have already been a few questions through chat, so I'd like to start by addressing those, if I may. Specifically, there was one on a point that was touched upon earlier from Joanne. With crowdfunding online and ICO, why are female startups not viewed as equals? And positing, is it proportionality? There are fewer female-led startups for enterprise scale startups that interest investors more? Now,
So actually, I want to jump in there because we're crowd investing, right? So we're like Kickstarter, but with equity, right? So you invest in a company and you get a security back. But actually, female-led startups do better on crowdfunding. And the reason why is because people around the world see women as more trustworthy. Like, you're going to take my dollars and you're actually going to make something happen compared to men. Fun fact, which is why 40% of our founders are women. They actually excel in the crowdfunding space because that also means that it's a lot about hustle. It's a lot about getting the word out and marketing and all of that. And women tend to do that more than men. So if anything, and one thing I want to point out is that we're industry agnostic, and B2B companies actually perform better on Republic than B2C, which is very interesting because you would think that consumer centric startups would perform better, but people, I think, by evaluating companies as an investment opportunity, understand B2B, and they're more sophisticated than we give them credit for. And so to that end, and so enterprise companies have raised they have raised the cap of $1 million more than consumer companies. And so that's something to also consider, like things that people think about, like, oh, this is the case. No, it's actually the opposite, which is pretty exciting to see now after about 5 years of data through public. So my 2 cents.
So I just want to slide in a quick comment here, just for those who are fairly new to fundraising and how it works. Generally speaking, the average raise on crowdfunding is orders of magnitude less than what people would raise with investors. I find that, having been working on this for a while now, that people are so quick to jump to say there is no problem. The moment you show anywhere that women or minorities are doing better, regardless how small of a sliver that is, people are like, oh, then everything is okay. No, there's a big gap between venture funding and crowdfunding, and we're nowhere near okay. Just wanted to put it out there.
Yes, I will mention, however, over Republic, our average raise is $500K. So it's also a whole different beast compared to like the Kickstarters or iPhone Women's or like all these other things. Like those are much, much less, which is also why this is something that we're focused on, is like continuing to bring in startups, especially underrepresented startups, so that they could raise these higher amounts through our platform.
That's fantastic.
Yeah.
And if I'm not mistaken, the experience Priya shared with us earlier indicates there isn't a lack of supply in the enterprise domain of availability of willing founders. Thank you. So,
right. Ahmed, there's also more stats. I can find them and send them out later, but there's more stats that at each stage, like Series A and then Series B, Series C, at each stage it becomes increasingly more hard for women founders to raise the round. And so at the earlier stages, it's easier. Nothing is easy, don't get me wrong, but it's easier than raising the $50 million plus growth rounds as well. There's so much fewer stats over there because they ended up getting weeded out through the way. So what do we do to fund them across the entire life cycle versus necessarily that initial round is also something I keep thinking about.
Well, Priya, and if I may, I'd like to skip ahead to Steve's question, which is directed to you, where he would love to hear a continuation of your findings or thoughts on what is broken in the connection between female and other underrepresented founders and VCs. And I'll pose that question to the entire panel, but I'll start with you, Priya, if I may.
Sure. So I mean, if I'm taking a macro step back, I think there's two fundamental problems. One is women founders are just not currently at a 50-50 ratio in the pipeline that people are sourcing at VC funds, right? So from a pipeline perspective, there's already less female founders in there. So that's one problem. And the second problem is, even if you do have a 50-50 ratio in terms of the pipeline that you're sourcing, the close rate of the deals that you end up doing is still not quite there. So that brings in a different type of bias where that brings in the bias of when a woman founder pitches versus a male founder pitches. Maybe there's unconscious bias in the room or whatnot, that somehow the close rate is much less for the woman founder than for the male founder, right? And so I think those are sort of two problems that exist. And my thoughts on the first problem of the pipeline problem is first acknowledging that it's an issue and acknowledging that there is genuinely money left on the table. If your incentive is to make massive returns for your LPs, being able to find alpha is actually very, very important. And what alpha looks like inherently can't be what was done historically in the past, because we're in the business of innovating in the future, right? Like, we're investing in things, in markets and categories that haven't even existed in the past. So being open-minded to enhancing what that pipeline looks like is the first part. And in terms of the unconscious bias and what happens when a woman founder ends up pitching versus a male founder, I think there's just so much more awareness that needs to be out there. And that can only be fixed, I think, as we get more women general partners at VC firms, right? Who have experienced this before and who can educate the rest of the partnership. It's basic little things.
I'd love to pitch in here a little bit. So there is this issue of, I have a slightly controversial view here, and if somebody wants to counter that, I welcome that with open arms. I think that the way we view female versus male investors compared to female versus male entrepreneurs needs a little bit of an adjustment. I think that they're both problems, and they're problems that stem from a similar issue. What I see sometimes, and I did not hear this perspective from Priya, but I've heard it before, is that almost like, forget about female entrepreneurs, let's fix female investors first, and they will fix the issue with entrepreneurs. And granted, almost all of the people that I hear talk about, well, at least some of the biggest pioneers in giving opportunities to female founders are female investors. But it's complicated, and we need male investors to be on board and to be doing active effort and not to be leaving the job to female investors, in part because there are so few of them, in part because they're often not the final decision makers, and in part, and this is something you don't hear anybody talk about, all of us have implicit bias. There is excellent research by Dana Kanze. It's a paper called "We Ask Men to Win and Women Not to Lose." So essentially, both male and female investors, when they ask questions of entrepreneurs, if it's a woman, they ask her, how is she not going to lose their money? Okay, you made it this far, how are you not going to lose it? The research is much more important, but I can just tell you that as an entrepreneur, that's all I ever get. Is any milestone, it's like, well, how is this not going to disappear tomorrow? How are you not going to lose all of our money? And the research is showing that that's much more important than any anecdotes that I have. Or as men are asked, okay, how are you going to make this big? How are you going to succeed? How is this going to grow? And when you moderate for that, when you sort of make people aware of this and make it so that they don't ask questions like this, and things get a lot better. So actually intercepting the implicit bias where it comes in closes the gap, closes the funding gap when it's possible. Yeah.
Wow. So if there are no other thoughts on this question, I can move on to the one I skipped over, which was from Antonia. How can VCs speed up their methods of funding in view of these findings?
FYI, guys, all I'm doing right now is also just putting a bunch of stuff in the chat so that you guys have resources. I don't know what the breakdown is for the audience, I think there are some founders, I think most are founders or people in the VC community. So Republic has an initiative around cities. So we actually try to invest in different types of nascent and emerging ecosystems. We also have a venture partner and fellow and associate programs to make sure that people are breaking into VC. So that's really exciting. And I'm also leading that initiative. And then I'll just also be posting some other stuff. Like, for example, Mariah's question around, hey, how do you know if the VCs are talking and walking the walk? You can always, just reach out to me. By the way, I'll also put my information, but like, there's a couple of Airtables that are out there, and I'll put them in the chat right now just so that people have resources on that. So I think sometimes it's just better to send links and call them. But that's my 2 cents.
So there's another question here, which is fascinating. Why aren't there more stories about women founders, more PR, more communication about their successes?
Stories, well, in part because there are fewer such stories. So that's part of the story here. And in part, from what I'm seeing in the media, is media likes to tell stories that have already been told. I mean, I found this with this research. They took the research findings, and most of what the article was about was things that are already known. That really surprised me. I don't know how much the media is comfortable breaking the mold. That's the question that I ask myself that I'd like to explore more.
All right. So I'm just checking here. We're getting close to the final, to the end of our time, but I understand the panel is willing to stay on for extra questions. Oh, excellent. So Cheryl, you're already responding to one question here about resources out there for female founders to identify which VC groups are focused on female founders. So we've actually already got in the chat one shout out from such a group. So Mariah, I would urge, I believe it is Melissa to also comment in the chat again, because those of you who aren't aware of this, if you haven't seen the earlier chat messages, they don't usually show up if somebody joined late. Any comments or thoughts on how to find resources supporting particular groups?
There are massive lists where I'm seeing a shortage, and if Priya and or Cheryl maybe know where to find this, that'd be great. Basically, early stage that actually invest early stage and don't lead. So there are a lot of VCs that focus on women, but either late stage or follow, which means that they don't actually increase the number of investments in female co-founders.
Are you saying that they lead or don't lead?
I mean, most of the ones that I've seen on lists, they either have a follow strategy or they invest late stage. So my question is there, I mean, the one that's you're leading sounds like that's perfect. Like it's.
Yes, but we actually do have more of a follow-on strategy. So that's unfortunate, which is why for the community fund. For Republic, for example, you can do that though, just independently of VC, which is really nice. So Republic is that Lightspeed is follow-on, community fund is follow-on, VC Familia can co-invest or follow lead.
So is there anything that's early stage and not follow-on?
Yeah, that's actually a very good question. There's a couple, but I don't generally see them. So
I'm seeing a link.
We need to make a list for that actually, which is pretty interesting.
And the other little caveat is ones that ideally, I don't have to be that picky, ones that don't insist that it be a female dominated industry. Because that's another issue. Investors are more comfortable giving women money when it's a clearly female industry like fashion, which is very insulting to people, to women who want to change the world for both men and women. And so there are these, I mean, it's incredible. Think about it.
It's actually crazy too, because I invest in femtech and silver tech, two very specific verticals. And it's funny, more men will still get investment even though they're leading a femtech company. So improving women's lives, and they're still going to get more money than women. even though they're women. It just makes no sense to me.
Because
that's
people
why like the biggest femtech companies are like hims and hers. Like they did it as an afterthought. They first focused on the guy and then they did it for women. But that's my just 2 cents there. Isn't that crazy?
So to recap, just to make sure everybody got the message here, we got, there are investors that focus on investing in women. They typically follow on, which means somebody else, a traditional venture firm, has to decide to invest first, or they invest in late stage after the woman managed to raise money in previous rounds, so years before typically, or, and this is almost the best case scenario, that maybe they invest early, maybe they lead, but typically that would happen if it's very focused on female consumers. So it's almost like another way of keeping women in the kitchen. Women are allowed to deal with clothing and makeup. So the bias is, so as far as solutions, we have such a long way to go.
I will add one comment that instead of, so we were just talking about focusing on what are the VC firms that are the right fit at this stage, who can lead. But I would almost encourage folks to start thinking about who at which VC funds, because there are certain partners at different VC funds who still love investing in women entrepreneurs that are building companies that are outside of just women dominated fields, right? And so as a quick plug, I am, and I do enterprise software investments at Mayfield. And if someone were to look up my background over there and reach out to me, that would be a much even better fit than just reaching out to Mayfield, right? And I think we can do that in the interim in order to solve this massive problem.
Maybe we need a list of female investors that are willing to look at early stage companies and that are able to lead. That would be really, really powerful. Priya, maybe we should. Let's get this done.
Yeah.
Well, I do have to point out that several audience members have been sharing resources and links in the chat, and I'd like to thank them for that very much. Finally, all right. So final question, really, unless there is more from the audience. Any final thoughts or any particular point you would have liked to have made that we have not touched upon today?
I mean, not really. I would love to kind of, anybody who's interested in that, please reach out to Maya and kind of maybe we can do like a quick little LinkedIn group or something so we can get this happening. And if anything, I did put my information in the chat. I generally live on Twitter now, given the pandemic. So that's where I live, but feel free to reach out. And I mean, thank you for building this space. I think this was a very interesting discussion for sure.
So a call to action, all that's really left is for me to then thank our wonderful panelists, our wonderful hosts, and our wonderful colleagues at Santa Clara University for making this possible. Yvonne, should I switch over to you at this point, or?
Yes, please.
All right.
Really, thank you everyone for this interesting discussion. I think the chat has been exploding and I love all the information that's been put in there. Thank you to everyone who's been sharing. A huge shout out again to Santa Clara University for putting this event on with us. Maya, thank you for your research. Thank you for sharing that with us. Cheryl, Anne, and Priya, thank you for your input. Ahmed, thank you for moderating. Everyone, if there are, I will create a LinkedIn group as a follow-up so you can connect and continue the conversation. Carol will send that link out with the video so you can stay connected. If you have any questions, if you want to reach out to anyone, please feel free to connect with us. And otherwise, I will see you at another ACG Silicon Valley event. Thank you, everyone, for your time.
Thank you.
Thank
Bye.
you.
Bye.